The stock market. You see it on the news. You hear me screaming about it. But what is it? Think of it as a giant, super exciting marketplace. It's not a place where you buy apples or cars. No, no, no. This is a place where you buy tiny pieces of huge companies. Imagine a massive farmer's market. But instead of stands selling vegetables, you have stands for Apple, for Tesla, for Coca-Cola. It's a place where big money is made, and you need to be in the game to win. This is the big show, folks, and you've got a front row seat. Don't be scared. Be ready to make some money. This market is where dreams are made. It's where a company with a great idea can get the money it needs to grow. Let's say you have a fantastic idea for a new kind of soda. You need money for factories, for bottles, for marketing. Where do you get that cash? You go to the stock market. You sell little pieces of your company to people like you and me. These people are called investors. They give you their money because they believe in your soda. They believe your company will get bigger and bigger. The stock market is the engine of capitalism, baby. It powers everything. Now, this market isn't just one physical building anymore. It used to be guys in jackets yelling and throwing paper on a floor in New York City. That still happens. But now, it's mostly digital. It's a giant computer network. It connects millions of people all over the world. You, sitting at home in your pajamas, can buy a piece of a company in Japan or Germany. It's a global arena. This technology makes it faster, easier, and accessible to everyone. You don't need to be a Wall Street hotshot to get in on the action. All you need is a little bit of homework and a whole lot of courage. So, let's break it down. The stock market is a collection of markets, like the New York Stock Exchange or the NASDAQ. These are the places where the buying and selling happens. It's the meeting point for companies that need money and people who have money to invest. The companies want to grow their business. The investors want to grow their money. It's a beautiful relationship when it works. It's the heart of our economy, pumping money where it needs to go. It's loud, it's crazy, and it's where you need to be. No, 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 don't be a spectator. Get in the game. So what are you actually buying? You're buying stocks. A stock is also called a share, and a share is exactly what it sounds like. It's a small slice of ownership in a company. Imagine your favorite pizza place. Let's say it's worth $100,000. The owner could decide to sell 100,000 tiny pieces of the business for $1 each. If you buy one piece, one share, you are now a part owner of that pizza place. You own a tiny fraction of the ovens, the tables, and every pepperoni pizza that goes out the door. You're not just a customer anymore, you're an owner. That's the power of a stock. When you own a stock, you're betting on the company's success. If the pizza place does great, sells more pizzas, and opens new locations, the whole company becomes more valuable. Your little slice of the pie becomes more valuable too. That $1 share you bought might become worth $2 or $5 or even $50. This is called capital appreciation. It's how you make the big bucks. You buy a piece of a great company, you hold on, and you watch it grow. But remember, you have to do your homework. You don't buy a pizza place without tasting the pizza first, right? Same thing with stocks. Companies sell stocks for one main reason: to raise money. This money is called capital. They use this capital to do big things. They might build a new factory. They might hire more smart people to invent new products. They might expand their business to other countries. Or they might buy a smaller company to get bigger. Selling stock allows them to raise a lot of money without having to take out a huge loan from a bank. It's like crowdfunding for giants. They get the cash they need to innovate and grow, and you get to come along for the ride. Now, as a shareholder, a stock owner, you sometimes get other perks. Some companies share their profits with their owners. These payments are called dividends. Think of it as your share of the pizza place's profits at the end of the year. Not all companies pay dividends. Many young, fast-growing companies prefer to put all their profits back into the business to grow even faster. But for big, stable companies, dividends are a way to reward their loyal shareholders. It's like getting paid just for owning a piece of a company you believe in. That's a beautiful thing. All right, you're ready. You've got your homework done. You've picked a company you love. How do you actually buy the stock? You can't just call up the CEO of Apple and say, "I'll take 2 shares, please." No, no, no. You need a broker. A broker is your ticket to the game. Think of a broker as your personal agent who has access to the stock market. In the old days, this was a person you called on the phone. Today, it's usually an online platform or an app on your phone, like Fidelity, Charles Schwab, or Robinhood. You open an account, put some money in it, and you're ready to trade. The process is simple. You log into your brokerage account. You search for the company you want to buy. You'll see its stock symbol, which is a short code like AAPL for Apple or TSLA for Tesla. You'll also see the current price of one share. You decide how many shares you want to buy. Then you place an order. There are different types of orders, but for a beginner, a market order is the simplest. It means you're telling your broker, buy me these shares right now at the best available price. Click the button and boom! Within seconds, you are a shareholder. You own it. Selling is just as easy. It's the same process but in reverse. Let's say the stock you bought has gone way up in price. You're feeling good. You want to take your profits and pop the champagne. You log back into your brokerage account. You find the stock in your portfolio. You decide how many shares you want to sell. You place a sell order. Your broker goes out into the market and finds a buyer for your shares. The money from the sale, including your profit, goes right back into your account. It's that fast. The market is a two-way street, with buyers and sellers meeting all day long. So who are you buying from and selling to? You're trading with other investors. When you buy a share of Coca-Cola, you're not buying it from the company itself. You're buying it from another investor who decided it was time to sell. The stock market is a massive auction. Millions of buy orders and sell orders are flying around every second. The prices are constantly moving. It's a dynamic, living thing. It's a battle between the bulls, who think prices will go up, and the bears, who think prices will go down. It's the most exciting game in the world. Now let's talk about the price. Why does a stock that was $50 yesterday become $55 today? It's all about supply and demand, baby. It's simple. If more people want to buy a stock than sell it, the price goes up. There's high demand. Everyone wants a piece of that company because they heard good news. Maybe the company just released a hit new product. Maybe their profits were much higher than anyone expected. Good news makes people want to buy. And that pushes the price to the moon. This is the reward part of investing. But hold on, this ride goes down too. This is the risk. If more people want to sell a stock than buy it, the price goes down. There's too much supply. People are rushing to sell because they heard bad news. Maybe the company's sales were terrible. Maybe a competitor launched a better product. Maybe the CEO got into some trouble. Bad news creates fear. Fear makes people sell. And when everyone is selling, the price can fall off a cliff. You can lose money. Sometimes you can lose all of your money if a company goes bankrupt. Never, ever invest money you can't afford to lose. So why do people take this risk? For the rewards. Over the long term, the stock market has been one of the best ways to build real wealth. Better than a savings account. Better than hiding cash under your mattress, that's for sure. While prices go up and down day to day, historically, the overall direction of the market has been up. By investing in a mix of good companies and holding on through the scary dips, you give your money the chance to grow much faster than inflation. It's about participating in the growth of the economy. It's about owning your piece of the future. The stock market is vital. It's not just a casino for rich people. It's crucial for everyone. For companies, it's the place to get the fuel they need to innovate, create jobs, and build the things we use every day. For you, the investor, it's a powerful tool to save for retirement, for your kids' education, or for that dream vacation. It allows you to become a part owner of the greatest companies in the world. It gives you a stake in our collective success. It can be a wild ride, but if you do your homework and stay in the game, the stock market is your ticket to financial freedom.